All right, hey traders, TG Watkins here. Let's see, of course, try and get this up on a new computer and my video camera's not working. So we'll probably just not worry about that right now, even though this looks like it should have been doing just fine. So we will skip that portion of it. Okay, so we'll be tuning in. We've got FOMC minutes later today, basically 2 hours before the market closes. So do be aware of that. Oh, this is not closing. All right. There we go. Slow computer this morning, I guess. It's getting ready for too much turkey in its stomach. All right. So that being said, if you guys are interested in me, anything I'm talking about, and where to find more information, you come over here to profitpilot.com. And then, yeah, let's kind of get into it. Now, of course, I want to make sure that everything I'm doing, providing for you guys is good and good information for you. So if you have any questions, let me know, and I'll be able to get through them. And we're just gonna take our time, walk through things this morning, and we'll see what we can do. Kevin, good morning. Lakeland, Florida, huh? Yeah, well, it must be, well, I guess you're probably getting just a little bit cold over there. I'm up in basically Seattle, Washington area, and it is getting chilly and rainy. So I think the biggest thing we need to worry about recently is we have a very steep driveway. We need to make sure that it doesn't freeze up and then we slip on it. So I got all the right things for getting the winter around here. All right, so the biggest thing that I've been seeing with the market is that basically we've been having a melt-up rally. And what I'm looking at in through here, I think it's a low volume, and I'm going to basically call it a short squeeze. It's kind of one of those phenomenons that you see that coming into, say, a low week. A lot of people are off, not too many people are actually pushing the market around. And what's been happening in through here is that, let's see, no audio. Okay, let me, all right, hang on 2 seconds. I guess all this stuff with the new computer and trying to get everything up and running. So let me get all that stuff worked out for us. Okay. All right, Mirza, how's that? We got audio now. I think we should be good. So, yeah. All right, guys. Well, over there in Moxie, you didn't miss anything. I was just kind of getting going. But what I'm looking at through here is what I would consider a low volume short squeeze. I was kind of addressing it yesterday with you all. And generally speaking, we know that in this market, there are a lot of shorts. We have a lot of people who have puts. The put call ratio is still elevated. We have a lot of people who are bearish, and we have a lot of people on the short side. And what's happening is, and this is my opinion and my view from how I'm interpreting the charts and everything, because I've seen this before, so this is kind of like how my detective work of what I'm seeing through here, is that we have low volume coming into the Thanksgiving holiday weekend. And so what that means is that a little bit of movement or a few traders or a few funds can move the market. And what's happening is in through this area, the market wasn't able to break lower. I was looking for it too. I thought actually it would be a little bit more on the short side. I thought more of the bulls would be a little bit more nervous about this market going into a long weekend, but it turns out that is not the case. And so what's happening is the bulls are not letting go, so the bulls are not selling. So they're kind of buying it up, or at least holding it up gently. And then the bears are not pressing, which means that there's a number or group of traders out there that have bearish positions, and they're having to unwind those positions simply because the market's not going down. And so what that's doing is it's kind of feeding on itself. And through here is that you do have some bulls out there who are not selling, they're buying. And then you also have the bears, a certain group of them, that are needing to unwind their short positions. And so what you get is something like this. And this does not look like typical buying, like, okay, new money coming to the market, that kind of thing. This actually looks more like a kind of a short squeeze. And I can kind of show you some other areas around where we've seen something like this before. But then also looking at the Moxie indicator and coming in through here, it looks very similar to that. You guys see kind of the same thing. There's a way that price just moves. It tends to move more vertically than actually more like a 45-degree angle testing support. A short squeeze tends to be more up, like a straight up kind of situation, because the shorts are getting their stops hit and they're just having to exit and they're just buying at any price to get out. And so it's a more of a straight up. That's why short squeezes are great if you're going to be trading against them on the long side. But what happens is when a short squeeze is done, because all the shorts have gotten squeezed out, but there's no real new buying, they tend to collapse on themselves. So what you can see here is that short squeeze was done, and then it collapsed on itself because, well, there weren't any real new buyers coming in. It was just shorts having to get out of their positions. And I feel as though this is the same thing. Now, of course, we're not going to know today, although we do have the FOMC minutes later today, so we'll have to see what kind of fireworks that provides. And then we have the markets closed tomorrow, Thursday, for Thanksgiving. And then we do have half a day or early day on Friday. Now, typically Friday after Thanksgiving is a pretty calm, quiet time because, everyone's happy and they're on vacation, not really caring too much about the market. But I will say last year was a pretty wild time because the market did go down in a big way on the day after Thanksgiving. So it can happen. It's not typical, but it can happen. And then I want to say even in 2018, I want to say that the market was also working its way down. But I think for around that holiday season, it did go up just for the moment. But then after that Thanksgiving holiday, it went down too. So that's kind of more where I'm coming from, is I think that this is a artificial move to the upside. I think it's generally short squeezing. And I think that we're running into a risk area on the long side. I think that we're running into an area where price is going to start running into major long-term resistance. And that aside, even if I were to be looking at my style of trading and say, I love this market, this looks great, I want to be long, what would I be doing? Now, those in the Moxie group, you guys pretty much know what I'm going to be saying in through here. But anybody else, I would be saying, I'm looking at this like, yeah, we got price over the 50. That's great. We're probably going to start running into some resistance around the 200. And the next thing I would be looking for is I want to see if price can actually pull back. And if I'm bullish, if I want to see something strong here, I want to see if price can actually hold the daily 50. So that's kind of where I'm at, is I want to see if in the big picture, if price can actually get back to the daily 50 like it did back here. And if it can hold it, then we can be bullish. If it cannot hold it, then we're bearish. And the other thing that I'm noticing, very similar to what we got kind of in August, notice how price has not tested or touched the daily 21 for this entire move. Even the little pullback flag that we got after the cooler CPI reading, we have not touched the 21, which I think is lending itself to some instability and some risk underneath. Because as you can see with August in through here, that move was so strong, which is great. Hey, trade it on the way up, have a good time with it, all that kind of stuff. Just understand that you're running into major resistance overhead and you have not been kind of testing support as you've gone along. You have not been doing that. It's only been running the 8 EMA, which, as I said, is great and strong. But when that runs out of strength, there's not much underneath to hold it. And so what I'm looking for is, now whenever this thing is ready to break, and again, I don't think it's going to necessarily be Friday. It's probably going to be sometime next week. We need to. I'm then looking at the daily 21, maybe even below it, which you can see here. The August situation went below it too. So I was kind of thinking maybe we get more of a pullback here and then we move up like that. That didn't happen. So I was kind of looking for it. Didn't happen. What it did instead is a shallow pullback and then it moved up. But I think what that's doing is now it's kind of like kicking the can down the road, or just like pushing even harder, so that when it finally does come down, I feel like it's going to probably come down fairly strong or in a hurry. Again, these are kind of these things that I'm looking for and have ideas about, but can't quite confirm anything yet. So that's generally the outlook and theme that I'm figuring. And then just remember, going back with the Moxie indicator, this move up here has not been very strong according to the Moxie indicator, and you can see similarities here. And those are some of the things that I'm banking off. And the Moxie indicator on the 15-minute time frame has been able to tell me that going all the way back down here. Now, timing is, of course, important, and I was a little bit off on some of my timing for a couple trades, but I think that the bigger picture is we're going to see a more significant move to the downside, and so I'm just kind of be hanging on to that, because this Moxie indicator, being that they're spread from each other, tells me that this is not going to be super strong. So I'm just kind of waiting for that. As it's kind of a holiday week. a little bit of short squeezing, and the market can get pushed and moved on lower volume because there's just not as many people around doing all their things. Now, if we look at that, another interesting thing is that if we look at the VVIX. Now, this is this is kind of called Sam's baby. He really talks about this one quite a bit. It's the way he puts it it's the VIX of the VIX. So it's the thing that will wiggle first. And I'm starting to kind of look into this thing a little bit more. It's interesting to watch. It really does set up before even the UVXY sets up, and it is like a step or two ahead of even the market rolling over. So pretty interesting to keep an eye on. And so when I was looking back here, let me zoom in a little bit further. You guys see the elf shoe? Here's the leg, here's the heel, here's the arch of the foot, ball of the foot. And so the next thing I want to see is if price is going to move up like that. Notice that there is a squeeze. And notice that there's a squeeze on the hourly chart. So, you know, this thing's been consolidating. There's something going on here. The other situation that I'm noticing, well, where I was not wrong, but where I was looking at is this pullback right here, price below the 50, the Moxie indicator above 0. I think this is actually a really good example of why I have to, when I talk about patterns, I have to talk about a potential pattern. So if we go here, let me show you this because we can see it better on the 15-minute time frame, actually. And so for those of you who are on Facebook or YouTube and maybe haven't really seen me before and don't know my lingo, you know, feel free to speak up. Let me know if you have any questions, if you need me to explain something again or go a little bit more detail. Just let me know if you have any questions out there. But when I was looking at this, here's price below the 50, here's the Moxie indicator above 0. Anybody who knows me and my trading style and the rules and all this stuff, this is what I would be looking at and saying, oh, hey, that's in trampoline territory, right? Price should not be below the 50 if the Moxie indicator is above 0. So I'm looking at that and saying, trampoline, okay. But I have to say potential because it hasn't fired, you know, and in order to confirm it, I look at the next lower time frame. And you can see that the next lower time frame, right where price was doing this, you can see here, was running into the underside of a downtrending 15-minute 50 with the Moxie indicator below 0. Therefore, it was not setting up and had not confirmed on the 15-minute time frame, which then negated this as a trampoline move because you can see the Moxie indicator never actually stayed above 0, and you can see that price continued to fail down. So we went from potential because of that to not actually working because of that. And what we could see is you look at the lower time frame, the 15-minute time frame, and we could say, yeah, it didn't fire, it did not confirm because price got rejected by a downtrending 15-minute 50 with the Moxie indicator below 0. That confirmed to the downside. And so the potential trampoline move on the hourly chart basically, you know, went away. It was a potential, it never triggered, okay, no trade. But now that we're kind of down here, now that we had this little plunk of a move down here, extra little, you know, bunk down like that, it may be setting up something differently. It might be just setting up refresh for a normal, typical Moxie setup. Like, well, notice we have basically a double bottom, but notice we have positive divergence. That's another Moxie setup, okay? You're looking at a double bottom with positive divergence. That's the Moxie indicator trying to tell you that internally there's energy and momentum starting to build to the upside. And we could see the same thing here with the 15. Notice that the 15-minute Moxie indicators were starting to move up as price kind of went down, and now price is up over the 15-minute 50. Now, this again is not done yet. Remember, on the SPY, I was saying, hey, you know, when the 15-minute Moxie indicators are spread like this, they don't really agree with each other, they're not super strong. That's right. But this is the beginning of something that I'm seeing, mostly because all these other patterns are starting to form. You know, we got this positive divergence. We got the elf shoe here on the daily chart. And so now I'm looking at this and saying, the VVIX, which is the VIX of the VIX, and the thing that tends to wiggle first before the market actually starts to get weak and roll over, is starting to show signs of a new, fresh, bullish setup. And if this thing is starting to show it, then that means that we need to be careful about the market starting to run out of energy on the upside, which again goes along with what I'm saying about this low volume, a little bit of a short squeeze into the bullish holiday situation. But I think that we're running up into overhead resistance, and I think that tying all this together, the narrative that I'm stitching together is that the VVIX is starting to sniff out some weakness and some resistance in the market, and I think that we're going to start seeing this this start to move up and the markets start to move down. But again, it's probably going to be after this week because of the holidays. So as far as timing and trying to get all that stuff put together, I think that's what I'm seeing and through there. Add that to the VIX. the VIX, yeah, still can't find any footing, but we are getting into an area where it typically reverses. You know, like if you just, let me go over here. You know, typically when the VIX gets low, it does start to reverse, and we're kind of in that area again. So we're at an area where you need to be careful on the long side because we are starting to see that this tends to be a turnaround spot, something to that extent. All right. So that's the VIX. The UVXY, kind of the same thing. It's been melting down. My timing on that was not the ideal, but I think that it is starting to set up to where we're starting to see price is getting a little excessive. So, you know, third ATR, you know, we saw third ATR, it tucked in a little bit, and we're starting to see third ATR again. So we have that, plus we do have some divergence here on the hourly. I think that this thing will, again, turn around, but I think it's going to take till the end of the week. Let's see, Frank, you were looking at, I think it was XLI. So XLI looking for a short, and I would say that this goes along with my overall view of the market and the Dow and all that kind of stuff. What I have to be careful about, and this is something that we don't know yet, I don't have an answer yet, but I'm noticing, of course, that the XLI, SPY, or the Dow, not the SPY, and some other tickers are starting to get back over their monthly 10 SMAs, okay? You guys in the Moxie room know that I've been talking about the SPY and all that and saying, as long as it stays below the monthly 10, we're going down. But the change, the change happens when price can get over the monthly 10 and we start seeing that it holds, and that's the next move to the upside. I will say that for as much as I have been looking for the SPY or SPX to get to about 300 or 3,000, I'm having to rethink that because I am seeing some strength out there, and I'm reading the dollar and the, you know, call it the TNX, the TLT. I'm starting to see things that the dollar and interest rates for bonds might actually be guiding the market more than what the Fed is and more than what the looming recession is right now. Okay, so I'm having to kind of open my mind again and change my opinion and perspective, but I'm looking for confirmation of these things. So it's right now in a state of flux. XLI right here, I think that is something, as I said, this is why I was talking about what I was just talking about, but I think that, yes, I think we need to consider something like this. We have a solid monthly bar over the monthly 10, okay? So it went from being below it to now being above it, and I think we need to kind of start paying attention to that and see if that's actually going to work. Now, that doesn't mean we go buy it up here, and that doesn't mean that right now is a good long. In fact, we could be getting a significant pullback. I am looking at this on the weekly chart. There is a big gap between price and the moving averages, and so I think that is an issue. I do think we need to see price come back down, and I'd like to see them find some support. The other thing, looking at this, yeah, this thing is super sky high. This would be basically the worst place to try and initiate a long position and a long trade. I think that we are pretty much at the end of our rope before we at least get a pullback. That's what I'm looking at. Now the question is, it's always about the pullback, right? Now what we need to see is, once we get the pullback, does this pullback actually start to hold and we start moving up? Or is it a different pullback? Come back, pull back, and actually go to the 50, and then we start moving up like that. So that would be a little bit deeper. And again, pull back to the daily 50 for what I'm looking for. Or do we do this where we go back up, down to the 50, and then we go lower, and that is the idea about the market failing and falling apart and heading to 3,000. So I have a few different paths, a few different things that I'm looking at, but all I know is right here, not a good long entry. And I would be more inclined to say, yes, at some point, whenever these things start to break down and actually go that direction, I would be looking for initially XLI, Dow, whatever, to come back down to their daily 21s, much like this. And if that happens, then we have to see about a bounce, and then we have to, again, it's kind of like 1 step, 2 step, 3 steps. We kind of have to do these all in phases and see what goes on. Anybody on Facebook or YouTube who doesn't know what I'm talking about, and these patterns and trying all this stuff is a little bit like mumbo jumbo. I know it kind of sounds like we're picking up, we're already in the middle of something. That's kind of the case. But if you have questions, come over to Profit Pilot, come over to the Moxie trading room, and this is kind of where you can pick up on my lingo and figure out what we're talking about. But yeah, I think at some point these things should break down. If we look at this, it's the same with the Dow. It's just super, super duper high. Now, I do want to say this is really interesting. Trend lines, sometimes they really work. I got to say, sometimes I draw a good trend line and they really actually work out. Let me show you this, because here's this trend line all the way here, and look what it did on the. You can see it on the daily chart. You can see it on the hourly chart. But look, resistance. You broke through it, and then you tested it for support. How's that? So pretty good stuff right there that helped confirm a little bit more upside for the market on something like this. That Dow trend line just pretty stellar, actually, pretty darn stellar. But if I back out a little bit and we look at just say the Moxie indicator, what do we got? We've had price up, Moxie indicator down. That's fine. But then you can see price did decide to bounce off of the hourly 50 just like one more time. But here's the issue that I have with this up move. The Moxie indicator is down here basically on empty. I mean, that is your fuel tank with that little orange light with the gas can next to it saying, hey, you've only got maybe 30 more miles until you run out of gas and you need to do something about it. That is basically what that's telling me. Okay, so that this thing is about to go on empty, it's about to go negative, and I would expect the next situation should at least be a move to the daily 21, which means a move break off of the hourly 50 down like that. And again, I'm not a super big fan of this up move, mostly because of that 15-minute Moxie indicator. It's just not. It's just not good. It's very weak. They're spread from each other. That is not something that I should be trusting. And I think that if we were going to be getting long in through here, we're basically getting long at the ninth inning kind of thing. This is the top of the ninth situation. I think we're at the very, very end of whatever this up move or up drift is going to be going into the holidays. Again, I don't know if Friday's going to do much. Friday could be a sideways day. Friday could maybe start something like this, but I am not confident on the long side in through here. Let's see, XLB. Yeah, so J-Law, same thing. Now, XLB, materials, ITB, Nail, basically home builders. The home building starts came out today, and I think they had a higher number than what they expected. So we saw Nail pick up a little bit. Now, I don't think it's quite ready yet, but it is something to note that if the TNX comes down, the TLT comes up, if the bond market starts to signal that lower interest rates are coming, then the idea that the market could actually be sniffing out what the Fed is going to do before the Fed actually does it is a potential. It's a possibility. So this is why in this section earlier in this segment, I said we need to keep an eye on the dollar and the TNX, because I think those are the things that are probably going to drive the market more in the near term than what the Fed says and what the recession is going to do right now. So that is kind of the interplay that I'm starting to notice. XLB, essentially the same thing as XLI and the Dow. I'm seeing all basically the same things. That yes, this was technically a trampoline move. You can see here, yes, price held the 15-minute 50, but this 15-minute Moxie indicator is not really making me feel all warm and fuzzy to the high side. We are pushing the outer boundary of the hourly third ATR. Maybe a double top. We can't confirm it until it actually rolls over the other direction, but maybe a double top situation. And we're, again, up here very, very high. We have not touched the daily 21, and we could even be looking at a 50, 250 situation on this stuff. So, again, we're in the last inning, I think, of this up move, as there's kind of this nice bullishness going into the holidays. But I think reality is going to strike pretty much once we come back from the holidays. So just be careful about this kind of stuff, as I'm seeing indications that we are running out of strength to the upside. Frank, let's see. Let's HYG. Let's take a look at that. I'm not too familiar with this because I don't study it too much. As far as looking it up, let me go over here. Let's just see if I see anything on the weekly and monthly. The only thing I can kind of talk about is that this thing has been oversold for a very, very long time, and that there is still a gap here between price and the monthly 10. So it's outside of that 30 ATR, there's still a gap between price and the monthly 10. You know, if the market does want to go higher, it seems reasonable that it could. Now, maybe again, maybe not right now, but it could do it a little bit later. So, you know, it's right here kind of dealing with the weekly 21. Maybe there's a little bit of a dip and then we come back up. It's a possibility. I am starting to see out there that this might be a form of an elf shoe. You can see this leg, heel, arch of the foot, ball of the foot, and we might be getting an elf toe like that. That's a possibility. I can't quite confirm it yet, but I'm seeing some, you know, inklings of that around there. And then as far as this goes, you know, it's done a fairly good job of actually crossing over all of this stuff. But again, I'm a little leery about this move up here, and I would really prefer to see price kind of come down a little bit before going up. Yeah, I think that's pretty much the best I can say about this. This kind of seems like a little bit of a forced move, but I like to see a little test, and then if we're going to go higher like that. I don't have a whole lot that I can really work with and through here. Again, 15-minute Moxie indicator not looking super strong. You're up here outside of the third ATR. I can't even really say too much about the hourly Moxie. Yes, there's divergence, but it's still above zero, so I can't quite work with anything there yet. So yeah, I have to kind of be soft about my interpretation about that, about HYG. Frank, I covered XLI. Basically, it's the same thing as XLB, so all that kind of stuff. Let's see. So Ross, huh? I have been noticing that a fair amount of the retailers have actually been not basically blasting higher, but they've all been doing it mostly on earnings. There was a bit of a lead up into them, and then they popped off on earnings. I do not trade earnings. If I do, it's rare, but I don't like to trade earnings. So, you know, that's why something like this was an earnings trade. You would have had to have just been in and rolled the dice and said, oh, I think it's going to, you know, be good on earnings for whatever reason. Beyond that, the only thing I can really see is that price stayed above the 15-minute 50. So big pop up, pulled back, found support, ran up on the 15-minute 50. I guess you could even say that was the hourly 8 EMA. But at this point, I would be extremely, extremely cautious if you were on the long side for something like this. It is up here in outer space on the daily chart. It is really, really high up there. And if I'm correct about my read on the market, that maybe next week is when the market starts to pull back, it's going to put some pressure on this. Ross is super high up here, and it is unlikely to keep pushing higher without at least some sort of significant flag or pullback. So I would not be initiating a long up here. If you are already long, I would definitely be taking profits and saying thank you to the market, because in this kind of market, things don't last very long. And I would look for the next opportunity. If you're looking to get in, I would wait and see if you can find a better opportunity or something like that. Yeah, so that's kind of what I'm looking at. Oh, well, should have covered this in the beginning. So UNG, this was a great trade. We bagged almost 50% on this with the leveraged ETF of Boyle. And this setup was almost identical to the setup in early January of this year. Almost exactly the same. But basically what we can look at is there was a lot of volume coming in on the daily chart over the last few weeks. And then you can see that there was an elf shoe. Leg, heel, arch of the foot, ball of the foot, elf toe. And you can see on the hourly chart we had price below the 50, but the Moxie indicator above zero. That was a trampoline move. And then you could see that there was a exactly perfect test of price and the hourly 50, and it flagged right into the 15-minute 50, and then, 4 days? Just straight up in 3 or 4 days. And it hit my target. So this worked out beautifully. This is exactly what I was looking for. I said daily third ATR, and it just nailed it today. So totally awesome move on that one. It's been a while since we've had a big move. This market has not been easy for things like this, and so I'm glad that this thing just worked out like just an absolute walk in the park. So really, really great on that. I'm glad pretty much everybody got to jump on board with that. And I think that UNG will give us more opportunities in the future that we can trade. And this should be something fun for us. So keep an eye on UNG, and we'll keep going there. JLA, yeah, cold, which is the inverse UNG. If you want, you could try and do it for a pullback, but that might be playing with fire. So I don't think you're wrong, But I think it's a little bit risky because we don't know what this thing wants to do, and you're trying to find a pullback in an uptrend. And I think you should generally go with the trend and just wait for the next long move. But hey, go for it. Do what you need to do. I know that I was like that when I was starting out trading, and my mentor said, "You do you. If you can make money on both ways and do this, then hey, there's more power to you, and there's nothing that nobody can tell you otherwise." So yeah, I would not disagree with you that I think that there should be a pullback, and you can maybe make a few bucks off that if you want. But just understand that the general trend I think is up, and I'm going to be waiting for the next opportunity to the upside. Yeah, a little risky. So, all right, guys. Well, thanks again, and remember, if you have any questions and want to look into who I am and what I do, come over here, profitpilot.com, and we'll check you out later. See you guys. Enjoy the Thanksgiving holiday.